Afternoon, guys. It's 2 o'clock on Wednesday, the 31st of March. I just want to do a quick video on some technical analysis that I've been working on and practicing. I've done a little bit on the pound dollar and the euro yen. I did some on the euro yen sort of late last night, early this morning. So that was off my own back. I did that with some of the stuff I've learnt working with Phil on the pound dollar from on the website. So I was quite pleased with what I'd come up with and the different options I come up with. It certainly made trading a lot less stressful, knowing I had multiple options of what price would do. So I've sort of extended that to some of the other pairs that I've been working with. The one that I'm going to have a quick talk through rather than write up a report on the website is the pound Swiss. I've been trading this pair, and for me, this is using some of the things I've learned with the technical analysis. This is how I'm actually seeing the pound Swiss at the moment. So if you look at the chart that's on the screen, for me the price has been hovering for the last, we can see there 1, 2, 3, 4, sort of 4 or 5 bars around the 161 price area. So looking back over the chart, the 161 area has been a fairly strong resistance level from when price has been underneath that level. It's had multiple attempts at breaking through each time it's been there. I mean, just this week we can see there's been 1, 2, 3, 4 attempts there alone just this week. And if we just scan back over the previous week, you can see there this is the 161 level where price has been. You can see the multiple attempts that it's made around here. Sometimes you can see the tail of the bars have just broken through. And what I've noticed looking back over the previous price action at this level is when price has been at that level and it's been rejected, it's followed pretty swiftly by a move down of maybe 100, 150 points around that sort of area. So I've been looking at that as an interesting area to get involved in. So looking at this level and how I would assess it for trades, I would look, first of all, the first option I would say for the downside is how I would see it. If price reacts off the 161 level as it has been doing previously and makes the move down, I would expect to see that 100, 200 point move to the downside. And depending on where the entry is, I should be able to get first and second swing targets in. Now at the time of doing this video, I have actually got a trade on the pound Swiss already. I was short from 160.55. So the way I'm seeing that is I should be able to get at least one swing target in. My weekly ATR, 10% of that is 50 points. So that should take me to 160.05, so just above this 160 level, which is marked off, which again has been a level where when price has reacted off 161, it's come down to the 160 level before using that as either a support area. It just holds at that area for a few bars and then makes its move back up to the 161 level. Or in some instances it's obviously moved down by 100 or so pips again and started its holding pattern over again. So I can see I can get, with my entry at 160.55, I can get at least the first swing target in. So what I would do, I would take off 2/3 of my trade at that area at 160.05, and then I'd let the last third of the swing trade run, just to see what happened at this 161 level. Because if it did go through the 161 and carried on going, potentially the next level would be 159.55, so that would be roughly sort of in this area, and then 159.05, roughly around there, 159.05 for a third swing target. So I'll take 2/3 off at the first swing target and we'll see what happens with the last third. That's how I see things to the downside, if price moves down the way it is doing at the moment. Oppositely, if price decided to go to the upside, it could break out of this 161 level. This is a genuine breakout of the 161. If it moves back up to this level, there isn't a lot in the way of anything stopping it here until we get to the 162 area, which is this line, which is a previous week's high. And again, going back over the charts, when price has reacted off 161, it's tended to move up to the 62 and then react off that as a resistance level and come back down. So I can see it moving to the 162 area. So maybe if it gets to that area, I would expect to see, if the history is anything to repeat itself, I'd expect to see maybe sort of 3 or 4 consolidation bars there, just sideways movement. We can see just quickly going over that one there. We've had a number of sideways bars there. We've got to the 162 level again. There's been a number of a couple of spiky bars there. Ultimately, price was going sideways. So I could expect to see that before again deciding what sort of direction it's going to go, whether it's going to reject off the 62 and back down to the 61, or ultimately punch through that 62 and carry on going. So that's how I can see things going to the upside. Again, depending on the entry that I possibly get. If price sort of gets back up to the 61 area, there's a good sort of 100 points in between there, and depending on the entry, I could potentially get first swing target or second swing target, depending on the entry. That would be something to assess when it gets there. And my final scenario that I could see would be a sideways movement. We could see this as a false reaction sort of off the 161 level, and instead of going and continuing its move down to this area and then potentially down further, could see it as a false reaction off it, and price could ultimately move back up and then sideways in this sort of range again, especially moving into Easter weekend and Friday with the non-farm payroll. It could potentially move back into that area and sideways. So probably around the 60, 160, 50, 161 level, somewhere around there. That sort of price sort of area, could expect to see price hold if it decides to move back and then sideways. Based off the fact that it has taken multiple attempts in the past to break through this 161 level, so that could be a reasonable expectation. Personally, I'm sort of favouring, although I am short at the moment on this from the 60.55, so I have positioned myself short with the Fur Quad core swing setup. I am sort of edging more towards the fact that it might be a false reaction off 61, and it could move back up into this price range that I highlighted previously, moving sideways, and maybe just knocking around the 61 level before ultimately deciding where it could go. So they're my 3 different scenarios that I've got. So price could move up, down or sideways, and hopefully I've managed to interpret the patterns on the chart with some form of skill, and it gives me 3 different scenarios of where price could go and what it could do. So I'm fairly happy and relaxed, even though I'm short at the moment. I don't favour that as the best scenario. I'm really comfy with it being short, because I know from the three different scenarios I've got where price would go and what it would do, and if it does move back up into that 160, 50, 161 channel, I know what to expect from it when it gets there. So I'll just continue to see how the trade goes for the rest of the day, maybe into tomorrow, see what happens, and we'll reassess sort of later on and get a clearer picture and see where price is moving. So hopefully everyone has a good afternoon, and we'll speak on the website later. Alright guys, thank you.